Well, welcome back to another episode with ByrdAdatto. And as we have practices that are reopening, part of the process that a lot of people are going through is change comes opportunity. And with opportunity, people are reevaluating where they want to be. And so we're doing a mini series walking you through different things. We've already talked earlier this week about if you have to close your practice. But for some of you're not certain where you want to be. You want to still practice medicine, but maybe you have an exit plan. And you need to really start thinking about what does that look like in the next 5 or 10 or 15 years when you start getting ready to leave. And so today we brought in a special guest to help us with that exit planning piece. And Michael, can you please introduce our special guest?
Our longtime friend and colleague, Don Barbo with VMG Health. We have worked with Don back when we both were at different firms respectively, and found our way to where we are now. In some cases, back to where we started. In Don's case, and so Don has just been invaluable working with our physician clients over the years, and has just a heavy wealth of experience when it comes to valuation. We're really grateful that you're able to join us today.
Well, thank you, Michael, and very kind words from you. I very much appreciate that. And Brad and Michael and Jay and the other folks at ByrdAdatto, it's always been a pleasure working with you all. You have such a keen sense of professionalism and grasp of the healthcare laws and regulations, and just strong desire to serve your clients. So there's a lot of things that we kind of share in common, I'd like to think. So again, it's a pleasure and honor for me to be involved in this interview with you all.
Excellent. Well, Don, let's kind of jump in. So as I was saying, today we're really talking about when you're getting ready to start thinking about working through your exit plan. And one of the things that a lot of people want to figure out is, what is my practice worth, or what is my ambulatory surgery center, or what might the assets I have as a medical provider worth? And often, Michael and we have a whole bunch of ideas from a legal side that we can walk someone through from structuring and models, which we'll have other episodes on. But one of the most important pieces is, what is your value actually worth? And unlike Apple or other things where you're traded on a stock exchange, most of these companies are privately held, and so they don't have the stock exchange to tell them. And so sometimes they just take a dart and they throw it against the wall and they say, "Okay, I'm worth this." But that's them throwing the dart in the wall. And where you come in is you're going to say, "No, I'm going to help you guide that dart to hopefully into the bullseye area to really value what the overall company would be based on several different factors." And that's why we wanted to have you join us today, really start talking about that valuation, and especially during pandemic.
Okay, so the appraisal process could be fairly complicated in that when we're evaluating a company, we want to look at the historical performance of that company and then develop reasonable projections on the go forward. And so under an income-based approach, that's based on the projected performance of a business and the discounted cash flow value of that business. Then that's a forward-looking exercise. A market-based approach looks at what other similar businesses have been bought and sold for, and we look at what we call comps, similar to residential property or used automobiles, where there's a robust secondary market. So that's a market-based approach. A third approach is a asset-based approach, which would look at what are the underlying identifiable tangible and intangible assets that are associated with the business, and then valuing those, kind of the sum of the parts type of an analysis. I would say as a general rule, or in most cases, for a company that's established, that is growing and is profitable, we would generally use an income approach with typically a corroboration or sanity check using a market-based approach. And the rationale for that is an income-based approach allows us to look at the specific cash flows of that company and the outlook and the risk of those cash flows. So we can get our arms around that. We're not dismissing the market-based approach, but the market-based approach oftentimes has limited market-based information that we can use and rely upon. Now, all of that in the COVID environment is challenging because just really due to the disruption of the business's cash flows and its prospects for the future may not be as measurable as they were pre-pandemic. And what we're finding is that can certainly vary from market to marketplace as well as entity by entity within that marketplace. So, for instance, if an entity was facing furloughs and layoffs versus another entity that maybe had the cash resources to overcome that, then the outlook for those two businesses could be quite different, and therefore the appraisal outcome could be different. And just because a company performed in a certain manner pre-COVID may not necessarily be the case post-COVID. It just, again, depends on the facts and circumstances around how much that company is challenged on a go-forward basis. So it is definitely a challenge. I'll say that maybe pre-COVID, that particularly in the M&A market where investment bankers and private equity market participants might tend to use more of a market-based approach where they were looking at pro forma earnings and then using a market-based multiple to multiply those earnings to arrive at a potential purchase price. So that's a kind of a single period type of an analysis. I would suggest that on a go-forward basis, that may be a difficult kind of evaluation, overly simplistic model, because there could be ramp-ups involved in that company's performance going into the future, which would lend itself more to a multi-period discounted cash flow analysis.
Great. Well, what comes to mind, Brad and Don, is the questions our clients ask us when they're at this point, and one of them is, they'll ask the only thing they know to ask, which is what's my practice worth, and when we point them to an expert like Don, the first thing we'll say is, look, Don and BMG Health and companies like that are the ones that have the right credentials after their name to deem what a value is. And that becomes especially important because one of the circumstances where evaluation is needed is from a regulatory perspective. There are times where we have a client doing a deal where we need a valuation done to comply with a safe harbor or an exception that we're trying to meet. The second area that we see a need for evaluation is, even with a practice sale, a doctor is trying to figure out what to list it for and how to justify the value. And a lot of times they have a lot of chatter of what they've heard their practice is worth. And sometimes the chatter is not good, like they think it's not worth anything, or they'll have other, preconceptions of what the value should be. And we really point them to, if you want to have something that is a data point on what the fair market value is, this is the most established way to accomplish that, is to go through this process. And so, while it is complicated and can be a little bit overwhelming from the client's shoes, you guys know what you're doing and know kind of how to mix and match the different approaches that you just talked about to arrive at, what a reasonable value should be.
Correct. And you raised some excellent points. And Michael, my particular team at VMG, we also lead our litigation and disputes services practice. So what that basically means is if there's a litigation, arbitration, mediation, even a physician divorce matter, that falls to our team to jump in and provide the services around that, which could lead to testifying at trial or to a consulting expert role. But my team, that's about 50% of my team's practice. The other 50% are arm's length, generally amicable transactions between parties. And you're right in that this is a very important matter for a lot of our clients. This is their largest asset, their physician practice or their ownership stake within a surgical hospital. And we bring the exact same rigor, whether it's litigation or a transaction. We bring that level of rigor and analysis to all the engagements because we're not sure, frankly, if some amicable transaction at some point maybe is no longer amicable or becomes a disputed matter. So we want to make sure that we can stand behind our valuation analysis, that at the end of the day, our valuation is both credible, compelling, but also highly defensible. And to do that, it's mandatory or essential that we use the valuation standards that we are required to use, but we also have knowledge of the healthcare laws and regulations regarding fair market value, general market value, and commercial reasonableness, so that our opinions are compliant with those. Because generally speaking, our clients use our valuation opinions for two things. One is to deal negotiate a price within a fair market value range, but the other is for compliance purposes, to make sure that they're settling on a price that can be supported from a fair market value perspective.
Yeah, and I think that's what, both of y'all said things that I think for some people to take away that's really important is that you have to have the right party show up no matter where you are in a deal. And Michael and I have been a part of deals where they brought in a valuation expert and they send like a 2-page document that says this is what the value is. There's literally no documentation behind it. And so we, as attorneys, can't even rely on it. How can we say there's nothing behind it, even giving it the substance that we would need to say, yeah, we feel good about this fair market value. And that's, your team, which we've been involved with multiple times, your valuations have as you said, a lot of information behind it to show why you came up with this value and based on lots of different criteria, which I think a lot of people don't realize how important that is, especially as Michael said in the beginning, when you're dealing with something with an anti-kickback or a Stark issue where you have to get a fair market value analysis.
Right. So Brad, I guess to that point, it kind of goes to, is the evaluation, is it compelling in that was the information that you used and relied upon, is it credible information? Are the assumptions supported and explained? But is it also defensible in terms of are you using the appropriate valuation methodologies? Are you using the appropriate premise of values? Is the valuation consistent with the contemplated deal structure? To make sure that it's frankly defensible and compelling for the purpose and use of the appraisal report.
You got it. Michael, do you have any additional takeaways today?
No, this was great.
No, this has been great. And Don, like I said, super excited for you to join us because, as I said, we're doing this little mini series for everyone about the exit strategy. And that tends to be the first question is, what is my practice worth? So I'm super pumped that you could join us to kind of kick this series off.
It's my pleasure. And I would just say, maybe in closing, that a number of our clients are using this for marketplace opportunities, either to expand their market share and market reach, to perhaps scoop up businesses that are priced at a low price range at this point, or even in the case of physician syndications where physicians could be buying in at perhaps lower prices than what those prices were 2 or 3 or 4 months ago. So it can provide some marketplace opportunities for folks to frankly take advantage of at this point.
Which goes back to the beginning. With change comes opportunity.
Exactly.
Awesome.
Perfect. Thanks again, Don, and we look forward to seeing you hopefully on the street sometime soon. But as of today, we'll keep our social distancing.
Absolutely. Sounds great, guys. Take care and be safe.
Thank you.